Good afternoon. We are back in session with our focus hearings, focusing on federal funding that has been distributed and will be distributed to our state through the various departments and through our FSAC process as well. That's the Financial Stability Accountability Group. Just rolls right off the tongue. And next on our agenda, we have Director Perry with the Tennessee Housing Development Agency. And so, Director Perry, we'll let you get us started.
Well, thank you, Madam Chair and members of the committee. Good to be back with you. I imagine you have a few questions about all the federal funds that have come our way. I want to leave plenty of time to address all of those. So just in the way of opening remarks, let me simply say this. I think we at THDA have played the hand we were dealt as skillfully as we can. We have received an unprecedented amount of federal funding and program responsibility, and I think it's a real credit to the women and men who work for us that we have been up to that challenge. But in all candor, not all of these federal programs were terribly well thought out. A couple of them are a perfect example of what happens when you have a committee working late at night 3 days before Christmas to get something done. Couple of examples. The rent relief program, we have been given far more money than we will need, far more money than we can hope to expend for that purpose, and we've been further challenged by frequent changes in the rules, and just last month they moved the goalposts. We were on track to hit all the metrics, and then they moved them. So now we don't, but they've given us a helpful way to move some money around to make it look like we did. The Homeowner Assistance Fund, you may recall it was announced with quite a bit of fanfare last spring. We were one of the first states to submit a plan for how we were going to help homeowners in Tennessee that had trouble meeting their mortgage payments during COVID. We have been able to use a little bit of the upfront money to start that program for our own borrowers, and that's going well. But as of this morning, not one state has been approved to actually put that money to work helping homeowners. And then in April, you may recall, we were given $53 million for the HOME program. This was specifically to help people who are homeless, at risk of homelessness, or fleeing a violent domestic situation. We didn't get the guidance for that until September. And we can't go yet because we're obliged to go seek public comment, even though HUD has put the box pretty narrowly on what we can do with those dollars. But we'll go do that, and then we'll submit a plan. And then someone at HUD will read it and we presume approve it, and then we get to take applications for that. So we are hopeful that some of that $53 million actually gets put to work within a calendar year of the time it was appropriated. I could run through a few more examples, but I think you get the drift of the challenges that we have faced. Let me just pause there and go right ahead and invite your questions about our submittal.
Well, I'll begin, Director Perry. Understanding the challenges that you've just enumerated, do we have any idea how many homeowners in Tennessee have actually lost their homes during this process? And we were just not able, because of the strings and the process that was put in place, to provide assistance to them. And is there any methodology to go back to those who have, perhaps have been, their mortgages have been foreclosed upon, to step into that process, or is it just too late for those people?
No, I don't think it's too late. For the most part, you had a foreclosure moratorium in effect for much of that time. Also, we were proactive, certainly with our own customers, and I think most mortgage servicers were, in letting them know that they could go into forbearance. And we have some remedies to help people through that. Once we can start the Homeowner Assistance Fund and offer it to borrowers other than our own, we have the arrangements set with loan servicers, actually a couple of hundred of them, so that we can work with their customers as they refer to them, and there's still time to work that out. So I wouldn't think that you've seen too many people who are homeowners who have lost their homes during this period, but we're disappointed at the apparent lack of urgency on the part of our federal partners, because we've frankly been ready to go since July.
I think that is disappointing, and it's it's one thing to have the headline that the dollars are available. It's another to actually live up to that promise. So I certainly share your displeasure. We have a number of questions, beginning with Chairman Hawk.
Thank you, Madam Chair, and thank you, Director, very much. Appreciate the relationship that we've built over the years. To expand upon the comments that you're making with the chair lady, tell me about staff that has been required for the potential rollout of these programs. Have we had to add staff? Has that come from your budget, or was that going to come from the COVID dollars? Tell me a little bit how we're negotiating that and what we've had to do with staffing and where the monies are coming from there.
Certainly. We've subcontracted much of the work around the rent relief program. We have been given great flexibility by the Department of Finance and Administration to employ both short-term and long-term temporary staff. That has helped us ramp up quickly for a lot of the federal money that would flow through our Community Programs Division. We have basically reassigned some of our staff to be able to focus solely on the Homeowner Assistance Fund, but we will also contract out for a call center and functions like that.
Chairman Hawk.
And thank you, Madam Chair. Just to follow up on that, do we have the information technology, all the technologies in place to do what needs to be done? And again, is that coming out of your budget? Is that coming out of the COVID funds? Where's that coming from?
Well, we'll take that out of the administrative dollars that we're allowed to get out of the COVID funds. But our IT, as you know, we have a freestanding IT division, and that's given us flexibility to reach the contracts we need to set up the application portals online, the call centers that can be of help to people who need the assistance to apply.
Representative Campbell.
Thank you, Madam Chair. Did THDA advertise availability of funds when it and how to apply, and if so, what method of advertisement about the ERA?
For the rent relief, yes, sir.
The rent assistance. Thank you.
Yes, very, very extensively. Very early on, we contacted not just landlord and tenant associations, the apartment association. We worked with getting the word out to local governments. So if somebody called City Hall and had a question about that, we had answers ready. We employed our network of nonprofit partners who've been very helpful. We have sent some funding to the legal services offices around the state. They frequently are working with people to help them avoid evictions. We have an agreement with the administrative office of the courts, so they're getting information to judges so that when someone is actually docketed for an eviction hearing, they can make that person aware that this program is available to them, and oftentimes judges have been willing to give them time to apply if they've not already done so. And we're likely to provide more administrative funds to our network of nonprofits, because what we find is that not everybody's got access to a computer, and it's awkward to try to apply on one of these. So we're going to help our nonprofits set up a help desk, if you will, where someone can come in, get assistance to make the application, upload any documents that might be needed, or just get walked through the process if it's a little confusing for them.
Thank you. And what federal eligibility requirements were there for the emergency rent assistance, and were any additional criteria placed on folks by the state government?
Nothing additional was placed at our part. Originally, we were obliged to make more of an effort to, why weren't you paying your rent? Some evidence that you lost your job, or some measure of your income. As the summer went on, the federal government relaxed a lot of those things. I think we were pretty expansive to begin with. We felt that just about anything that happened to you last year was probably caused by COVID. We did draw the line at the guy who said his hardship was getting shot. He didn't make it. But, I mean, he made it through the gunshot, but he didn't make it into the program. So, we've,
COVID pulled the trigger.
I've always felt we ought to make some basic efforts to make sure this is a legitimate applicant. Things have been loosened up quite considerably. I have some reservations about that, and I fully expect that 3 years from now, someone in Washington will ask me why we did it that way, and my answer will be, well, we did what you told us. You know, the big challenge with that program, sir, is that we haven't seen anywhere near the number of applicants that we were led to believe and expect. A year ago this time, folks were telling me, you better get ready, you're going to have 200,000 people applying because they're behind on their rent and might be evicted. I don't think we've had 25,000. Now, we're not covering the major metro areas, but even if you add that in, we're way below what everyone expected.
Thank you, and thank you, Madam Chair.
Thank you, Representative Campbell. Next on the list, Chairman Zachary.
Thank you, Madam Chair. Director, just really an overall funding question. Assuming we have significant unused funds, how much of that goes back to the federal government?
That's going to be up to them, sir. Under the ERA 1 legislation, which passed first, Treasury is obliged to take a look at as of the end of September on who has spent what. And they have the option of reallocating dollars to those who need it. The issue, though, nationwide, no one has gone through all their money. So even if they were going to take it from us, there's no one to give it to who needs it. If any of the 4 localities in Tennessee run short of their funds, we've agreed to backstop them. We can send any of them $20 million tomorrow if they needed that. So I suspect the Treasury is going through this exercise because it is required by the legislation, but I'll be real surprised if they claw back any of the money, because it just says you can reallocate it to others, not that you can claw it back to Washington. So we'll just kind of play that by ear.
Chairman Zachary.
Thank you, Madam Chair. One more question related to the ERA 1 program. The big 3 in Rutherford received their allocation directly,
Yeah,
correct?
that was their option.
Okay, and how much did those 4 counties receive? Any idea?
I'd have to refresh my memory, sir. I want to say it's generally between about 11 and $18 million.
Okay, per county?
For each of those. Larger, I think, more for Memphis and Shelby, more for Davidson, probably the smaller amount going to Rutherford. And, you know, I thought it made sense for those 4 to do that because in many respects they had started a similar program using other funds last year, so they had a head start. They had the mechanism. It was pretty much a plug-and-play thing. So we've contacted them early. They had concerns about running out of the money. So as early as May, we had stood up some backup arrangements with them. So if they're short, we can help them.
Okay. Thank you, Director. Thank you, Madam Chair.
And I noticed Hamilton is not included in that list, so I assume that you all are managing
We are.
that.
Yeah, and you know, I spoke with Mayor Coppinger at length about this. His concern was they didn't have a program like this, and standing one up, staffing it, setting up all of that would have been a considerable expense to the county. And we're perfectly ready. We were ready to do it all over the state. I think we've done a pretty good job for Hamilton County.
And I would assume there would have been a delay. Of course, it turns out that maybe not have been the issue that we would have expected.
Yeah.
Before I go on to the next questioner, can you talk with us a little bit about the emergency shelter grants?
Yeah.
How they have been used, if we have unexpended funding there, what the rules are for using that funding?
That one's actually worked relatively well. Those are dollars. Now, we got 10 times as much money as we normally have for that program. So we had a couple of hurdles, but generally we will pass that through local government and nonprofit entities that are helping the homeless. The thinking is you want to get people off the street where they're more likely to get COVID or pass it to others. One of the big challenges we discovered right off the bat is it is a reimbursement program. Someone would have to spend their own money to do something and then get reimbursed. Well, nobody's sitting on this kind of money. So we changed a few things, and we were able to advance dollars to those nonprofits. They could use them and then essentially revolve them, drawing on the balance as needed. We have through the end of next September to fully expend those dollars. We think those targets are going to be met. We've assigned funds to all of our partners, and we're trying to help them. They need some time to staff up and to process paperwork and just meet with all this extra money that's coming their way.
And I would just, and, I know that everybody's working as fast as they can, but, it's winter and a difficult time for anyone to be homeless. So if
Yeah.
there's opportunities to get people off the streets and out of their cars, and particularly families, obviously, then
Exactly.
since we have the funds to do it, then hopefully we can get that done in a timely manner. Chairman Williams, you're next on my list.
Thank you, Chair Lady. Ralph, I really appreciate you promised me when you came in the door that you were going to make it entertaining. You've done a
Did you
pretty
like the
good.
gun?
Yeah.
Okay.
Pretty good so far. Just to follow up on Chair Lady's comments, though.
Yes.
The monies associated for the shelter program, are those available for reoccurring sources or management of those entities, or can some of that money be used for capital? For instance, like actually building a shelter in a community.
Some of the dollars we were able to give them let them acquire some extra spaces. They wouldn't have had time to build something, but they might have been able to acquire some space where they could house people. The home dollars, the extra 53 I referenced at the front, that can be used to build shelters or housing for those individuals. We hope be able to put those dollars to work. That's a longer-term process. But the funds for emergency solutions grants are actually pretty broad, and let me pull this up for you and give you a pretty good accounting of what we do with those dollars, or rather what our partners do. But those are things like you could buy personal protective equipment. You can provide hazard pay to your employees if they're there. You can provide incentives to landlords to house people, incentives for your volunteers, provide furniture and household furnishings. If you've got a place to keep people, but you need to set up some beds and those kinds of things. So it's been pretty flexible money. And because we've been able to provide it up front to a lot of these organizations, they've been able to put it to use and then keep revolving them as they provide additional services.
Thank you. Previously, I remember when you did come in the spring, because we knew we all of us were getting calls from our constituents about how they were not able to foreclose, but they had people that weren't paying their rent. Is the process at the federal government that they sent down for that, is the process of the threshold being met by the tenant the impediment to getting those pay distributed? Because I guess my thoughts are, when we originally discussed it, is that the money would eventually land with the mortgagee or the landowner who's not getting the pay.
Yes.
Is that because they're two different entities? Has that created a problem, or improving the COVID-related nature of it?
Yeah, I think it caused some complications at the start. They have since modified some of that guidance. Now, if a tenant won't participate, we can pay the landlord directly. If the landlord won't participate, we can pay the tenant directly. Okay. Though we point out to the landlord, you're the one owed the money. We'd like to pay you, but if you don't participate, I have to pay your tenant. Right. Whether he pays you or not, I can't speak to. Right. But we've also done more outreach to landlords, because I think some of them didn't want to participate because they felt there must be a string attached. And while anecdotally, the landlords who had good tenants, regular payers, they really tried to work through all of that with their tenants. If you had a problem tenant, someone who's damaged the property, someone who just decided to stop paying and you can't do anything about it, those landlords were ready to forego the money just to have the ability to get someone else in their unit. So it was a little more complicated of a process, but now we're in a position to help those landlords, and we are newly able to go back and help the landlord who might have been stood up for 5 or 6 months rent for someone who then left. And prior to that, we had no ability to go back and make that person whole. We can do that now.
Okay, more. Thank you. Are there any resources that either the General Assembly can assist you with, or that you already have in the tool bag that you could implement to make this process more smooth?
We have, all of you have websites. If you want to share the information more broadly, direct people to our application portal, or to our frequently answered questions, the more we can do to get the word out. We're going to continue those efforts on our own, but a kind word from anybody. You'll have constituents calling to ask you about it, even at this late date, and we're happy to make sure that you and your staffs have that information and can share it.
If you would provide those links to my office, then we'll make sure that everyone has them and can share them on their social media.
We'll make a point. Yes, ma'am.
Thank you. Representative Shaw.
Thank you, Madam Chair. Thank you, Mr. Director, for being here. And I'm sitting here thinking, I hear a lot of problems about homeownership. And most of the times it's people who the FICO score is okay. They can make the monthly payment. They just can't find that initial down payment. Is there anything out there that's available to help those people? Because, home equity is much more important than paying rent. As a matter of fact, I wish I'd bought a home when I first came here. I'd be better off. But is there anything out there to help those people? Because I see a lot of people who could be buying a house today rather than paying rent.
Well, Mr. Shaw, your colleague's going to think you just tossed me a softball, because that is exactly what we do at THDA.
Okay.
Probably 96% of the people who take advantage of THDA mortgages do so because we can help them with their down payment closing costs. And that has been enormously helpful to Tennesseans, because you're right, sometimes they've got the down payment, they're not prepared for the extra $3,000, $4,000, $5,000 in closing costs. We can help them with that. And in so doing, we get them in the house in a responsible mortgage, but let them keep a little bit of their money in reserve. Because we've found over time that the biggest predictor of success is not necessarily how much you put in on the front end, but do you have something in the bank when the water heater blows, or the roof leaks, or something else happens that might cause you to get behind on your mortgage and get in trouble? Those programs have been very, very effective, and they remain the bedrock of our mortgage business.
So what do a person, who qualifies?
Well, basically, if you've got at least a 640 credit score, we can work with you. There are income limits, and they're more generous than people imagine. In much of your district, I would imagine a single person could be making about $70,000 a year and still qualify for THDA financing. A larger family could be earning just a bit more. What we recommend people do is go to our consumer website, which is simply greatchoicetn.com. It will describe the mortgage options, how the down payment products work, because we have several options for it. Also give you a list of all 155 lenders we work through in Tennessee, and a list of the counseling agencies that can get you started with the homeowner's education that we require. And then you just work with your lender partner as you normally would. We're sort of the back office execution. And once it's closed, we service those loans. So we're going to have continued contact with the borrower. We can help them stay on track or get back on track if they've fallen behind.
One last question. Yes, Representative Shaw. Is there any kind of upfront preparedness you have to do? Like, do you have to go to school for 3 weeks?
Well, not 3 weeks, but 8 hours, and you can do most of that online.
Okay.
And we found that helps us because we get a better prepared borrower. I remember I bought my first home a long time ago, and I was sure I was signing over my firstborn somewhere in all this paperwork.
Yeah.
So I think people feel better about it if they understand what they're looking at, what these documents are. But part of the curriculum is also how to manage your money and how to handle your credit, so that you are in better shape when you do go for the mortgage, and you're in better shape to handle the financial responsibilities that come with home ownership. We feel that helps people get in, but it also helps them succeed in home ownership, and it's reflected in the performance of our portfolio over time.
My wife and kids, I'm still paying mortgage on them, so I know how you feel. Thank you.
Representative Shaw, I don't think there's any personal help available from the department for members. Representative Freeman.
Thank you, Chair Lady. Thank you. Director Perry, thank you for being here today. I've got a couple of questions, and I just want to make sure I understand what you're saying. So you started out by saying that we got more money than we need.
Yes.
And then we've had a couple of questions of people that are still trying to get payments or how do we get payments. So I'm trying to understand how we got more than we needed, but do we still have people that have applied and haven't received money? And if so, do we know how many?
The short answer, no. People who apply, we can work through their applications and turn that around in about 3 weeks, and that's going rather well. We could take 3 times as many people as we have helped already, and that will get us up to maybe $150 million of program funds expended. They gave us $348 to start, and before we barely got the program going, they gave us another $314 million. We will never use that. I mean, the Urban Institute did a pretty rigorous study of the program nationwide and found that in most instances, states were given more money than they could hope to use. And you know, I give people credit for good intentions. There were a lot of really astronomical estimates on the size and the scope of the problem. But not everybody was going to be eligible right from the get-go. Not everyone's mortgage situation was caused by a loss of income due to COVID. And so that's an impact. Even with the broader guidelines, I mean, we'll never use $700 million, never.
So are you talking the emergency rental assistance program?
Yes.
Okay.
Yes.
Okay. All right. So the people that you said didn't qualify originally, what were the reasons and what percent of applicants got rejected?
The rejection rate was actually very low, single digits. And it had less, in some cases, their earnings still, after COVID, were higher than allowed by the guidelines. In the early applications, there were folks who could not prove to the satisfaction of the Treasury rules that their financial hardship was related to COVID, the loss. Now, we've been able to go back to some of those people and say, the rules have changed. If you want to try this again, we can help you. And I think we've been able to do that in some instances. Sometimes, you know, well, in the Chattanooga area, we had a few people apply, and they live in Georgia, so we sent them to our counterparts in Georgia. We had a few people who were homeowners who applied, and we go, well, we got a program, but it's not this one. So we've got them on the list, and we'll reach out to them when the Homeowner Assistance Fund goes live. Great. This has been, you know, I talk with my counterparts around the country on a regular basis. With 1 or 2 exceptions in small states that started with a small appropriation, no one is seeing anywhere near the number of applicants that they expected. And again, I'm hopeful that the Treasury will broaden the range of things that we can do with those dollars. I'd like to put a lot of it into development of affordable housing or other ways to help Tennesseans get decently housed. The box is still pretty narrowly drawn.
This truly is the last question. So on the forbearance piece that you spoke of originally, I understand the original intent was to allow mortgage holders an opportunity to delay payments for a period of time.
Yes.
And the original guidance was that taking that forbearance would not negatively affect your ability to get credit in the future.
Yes.
I'm now hearing from many, when they go to the lender has found a workaround that they now want to see proof of payment for the last 12 months of a mortgage payment. Are you hearing similar stories? And is there something that we could do to ensure that the original intent of the forbearance is realized?
To be honest with you, I'm not hearing that, but then we've always been pretty proactive with our own. We would only hear that from our own borrowers, and we've been pretty proactive with them in explaining that, look, when your forbearance period is up, we don't expect you to come out of pocket with 12 months worth of payments. We will restructure your loan, we will recast it, add those 12 months to the back end. There are a number of things we can do. And frankly, with the Homeowner Assistance Fund, we are able to bring those borrowers current, and they're as good as they were before it started. And if they remain in financial hardship for a period of time going forward, we can actually make some payments for them. So we think that'll be very helpful, and that will be helpful to the broader universe of mortgage holders who don't have a THDA loan. But we need to get the go-ahead. As my colleague Mississippi says, we're sitting on G waiting for O, but we're ready to move.
Great. Thank you very much.
Thank you, sir.
I have two other people on my list, and I would ask if you could, both questioner and questionee, if you could be brief and succinct, as we have another group waiting. So, Chairman Wendell.
What's the state of free market affordable housing in rural Tennessee?
I'm sorry, what is?
Free market affordable housing, not Section 8,
Yeah.
not government assisted.
Yeah.
Somebody who gets up every morning, goes to work to either buy or rent a house from a free market, non-Section 8, non-government assisted, either
Yeah.
seller or landlord.
Well, for rent, I mean, here in the Nashville area, I'm hearing it's about $1,500 a month. The typical rent in a tax credit property is probably closer to $800. In areas like your district, those rents are necessarily going to be lower because market rents are lower than that. I'm going to guess that tax credit rents are probably more in the $500-$600.
Do you perceive there's a shortage of stock both for purchase and for rent? And I think you
Yeah.
do a great job. I have no
Yeah, no,
complaints.
it's
I'm
a
not here
fair
to complain, but it appears that your analysis may be somewhat rosy based on what I see every day.
It is a challenge for us. No one's building in affordable price ranges. The only affordable rental that's being built is through our tax credit program. And it's very difficult economically for home builders to build a home and expect to sell it for like $200,000. This is why our mortgage business has slowed, because our customers can't stay in the bidding as the price keeps going up.
This is the final question. Representative Williams and I live in an area, I guess all of us do, not just Representative Williams. I look in Nashville. I mean, there's a Ritz-Carlton and the Four Seasons are full, but that's not what I'm talking about.
Right, right.
We live in an area that somebody gets up and goes to work every day is being pushed out of either buying or renting out a residence because people move in from other places. That's fine. We're glad to have them. But as a consequence of that, people who go to work every day don't have a place to live. What's the solution?
Well, building more, and, you know, we're hopeful. As I said, I would like very much to use some of these federal dollars if we could and provide some subsidies or support to a developer so he or she can build homes and then make them available at a more affordable price range, $175 to $210 for buyers, and still make the profit they need to make to stay in business. It's a bigger challenge, and it's frankly something that's happening all over the country. We need to figure out globally how we build more housing, because that's what's driving prices for both rents and purchase.
And I would add there's an inflationary factor
Yes,
that's in there as well. I talk to my builder friends, and the cost of supplies going up every day. Chairman Baum, I'll let you close us out.
Okay, thank you, Madam Chair. Good to see you, Director Perry. You indicated that Tennessee had gotten maybe $800 million in emergency rental assistance. Even the analysts just predicted that about $200 million could be used, and yet only maybe $25 million has been allocated. You've also said that the rejection rate for applications is in the single digits, and so it's not really due to applications that are rejected. It must be because people aren't applying.
We aren't seeing anywhere near. As I say, you know, we were geared up. We expected to get 50, 60, 70,000 applications right off the bat. Hasn't happened. The ones who are applying, we're able to work through pretty well, but we're not seeing that. And again, we're continuing to work the rounds and get the word out. And we're going to think about what else we can do to work with our nonprofits to get their further help with outreach and engagement. We're working through faith-based groups now. I mean, anybody who's working to help people who have had a hard time financially, we want them to know if you're also struggling to pay your rent, there's a program there and you need to look into it.
Could it be that landlords are being unexpectedly sympathetic and flexible? Or maybe it's that renters pay their rent first and they cut back financially in other areas, but rent's not one of the areas that
There's a lot going on. You know, it's hard to characterize. I mean, I hear probably the same stories you do, of people who have money but choose to pay everything but rent because they can't be evicted. Other folks who have genuinely, they were always paid, but they lost their job and can't. And I think landlords have tried to work with folks through that circumstance. It's a range of things. We basically want to help every Tennessean that we can who legitimately qualifies for the program.
Okay, thank you.
Thank you, Director Perry. Thank you.
Thank you.
Again, I think all of us are just interested in making sure that we get these available dollars out to Tennesseans who need them as quickly as possible, and we appreciate your
ma'am.
work in doing that. We're going to ask our friends from the Department of Labor, Commissioner McCord and his whomever he's bringing to the front with him, to please step up. We are wondering if there's anybody left to answer the phone in your place, but thank you for joining us here today, Commissioner. And without further ado, we're going to let you, I think you have a presentation, and then I'm sure we will have a number of questions, because a lot of what you're doing, there's a lot of interest in with our constituents back home and with members. So please proceed.
Yes, ma'am. Thank you, Madam Chair and committee. Appreciate the time to be here. What we'd like to do is start with a short overview. And with me in the front here, Andy Summer is our Assistant Commissioner of Finance, and then Chance Deason is our General Counsel. And we do have quite the number of folks here to answer any other questions that may come up beyond just what's in the presentation. So with that, Andy, I'll turn it over to you.
Good afternoon, Madam Chair. Good afternoon, Madam Chair. My name is Andy Summer. I'm Assistant Commissioner of Finance for Labor and Workforce Development. If you'll look at the slide on the screen, this is representative of our COVID relief benefits for our unemployment insurance. We implemented 7 new programs during the pandemic, in addition to our regular unemployment compensation program, for a total of $7.5 billion. 6 of those programs were funded through United States Department of Labor, the first of which is the Pandemic Unemployment Assistance. This program provided funding for those individuals that did not qualify for regular unemployment compensation. These are your self-employed, 1099, and gig workers. That program totaled $681 million. The second program was the Pandemic Emergency Unemployment Compensation Program, which provided additional benefit weeks for those individuals who exhausted their regular unemployment compensation benefits. Regular unemployment compensation benefits run for 26 weeks. This provided an additional 48 weeks of benefits at $460 million. The third program, this is our largest spend. This got a lot of publicity. This was the $600 supplement that was added to the $275 that Tennessee paid in weekly benefits. This qualified individuals to receive up to $875 per week for the period April 4th, 2020 through July 25th, 2020. The program was extended in January 2021 at a $300 supplement. The total of this program was $4.8 billion. The fourth program on the list is the Mixed Earners Unemployment Compensation Program. This is for individuals that were claiming unemployment compensation and also had at least $5,000 worth of self-employment income. This program totaled $189,000. Fifth program is the Waiting Week program. This was federal funding for the first week of unemployment insurance for those states that waived their waiting week. This allowed states to get their benefits out faster to claimants. Lastly is the Reimbursing employer benefits. This is for your nonprofits, states, and local governments that reimburse the trust fund dollar for dollar. They don't pay employer premiums. This program resulted in federal assistance of $37 million.
And if I may, let me add a little color here. All those programs swirling around, there are 85 different distinct guidance documents from the feds during that time, updating or correcting or changing the previous guidance. So quite a bit of complexity in that. I'm sorry, go right ahead, Andy.
We also had a FEMA-funded program. This was from the Trump administration via an executive order. This was also a $300 supplement, which extended the federal pandemic unemployment compensation. This was for the weeks of August 1st through September 5th, 2020, for a total of $449 million. And lastly, I know you're all familiar with the coronavirus relief funds that we utilize to maintain our trust fund solvency in the amount of $939 million. Second slide, this is the administrative funding that went along with those programs on slide 1. We were awarded $56 million in 3 different buckets. Implementation funding was $1.9 million. This was for development cost. We also were awarded general administration funding of $47 million. This is for your recurring staffing, information technology, normal general administration recurring cost. And also we were awarded fraud funding in the amount of $7.4 million as well for fraud-related expenses. Of the $56 million we have remaining on hand right now, $7.2 million, which we plan to utilize. The last slide, we also had COVID relief funding for the Workforce Service Division as well. We had a National Dislocated Worker Grant of approximately $14.8 million. We've spent approximately $4 million of those dollars. This is for temporary disaster relief employment, career and technical training related to COVID-19. Remaining funds on hand are $10.8 million. We are looking to extend that timeline to be able to utilize that funding as that funding ends June 30th, 2022. Lastly, we also received coronavirus relief funds of $8.6 million that were utilized for reemployment services, career and technical training services, as well as the virtual American Job Center implementation. With that, Madam Chair, that's the end of our presentation. I'll be happy to answer any questions the committee may have.
Thank you. There's definitely a lot of funds there to look through and discuss, and we do have a number of questions, beginning with Chairman Williams.
Thank you, Chair Lady. Thank you, gentlemen, and your entourage and everyone in the office for their great work over the last 18 months. It has been obviously a great challenge for the citizens of the state, and I know you guys get a little bit of attaboys, but it actually was a great job. I know it was very difficult, very stressful on you and your families and your staff, so thank you for your great work. I know that in the last 2 budget cycles, 2021, 21-22, we added some additional full-time equivalent employees. I think it was about 70 employees. I guess the question would be, the funding of those employees were with these revenues. I'm assuming are being consumed by the revenues that you just described. The questions are, have you filled all those positions that you needed? And how long do you feel like that you need to continue to retain those? And quite frankly, do you think you're going to need them a year from now?
So thank you for the question and for the comments. A lot of ramping up that we did for the pandemic was contractors. And so we're in the process of level setting that now. As we continue to work, there's always seems to be something next on the horizon with whether it in unemployment, whether it could hit us again. In terms of the positions, I believe we filled almost all of them. I'll defer to Andy to give him a more specific answer.
Right. We utilized our same staffing pattern. We had some vacancies. We do, like Commissioner just mentioned, we are transitioning some of those contractors over to some more of those vacancies that we have right now, but we do plan on those 70 staff to be more long-term.
So it's the expectation that even though these federal funds are being consumed in order to provide for these FTEs, the legislature, if we decide to make them long-term employees and transfer them to contract our staff, then we're going to have to come up with the recurring revenues in order to continue to employ these folks.
So this is all federal funds, and all the UI folks are funded by federal funds. And so when we come, we ask for positions so that we can use that funding for those positions. So it's more of a position ask always than a funding ask, and we're a little bit different DHS is sort of like us too with a lot of federal funds, so it's position ask. And we are getting tight, and we'll work through our federal funding as we draw down. So we're definitely keeping an eye on that. I think we're going to be the contracted position, and to Andy's point, we use that to train new employees because you just don't learn it overnight. And after we've had somebody at customer level 1, they can transition. But we're reviewing that right now and continually asking and negotiating with the feds for additional funding.
I have a follow-up to that, and I do apologize. I'm going to have to step out here shortly for an FSAG meeting so we can talk about even more money that is coming our way. But in terms of staffing, I know everywhere I go, there's help wanted signs. So are you all having difficulty finding people, or because you're working with the contractor is sort of a, that's a preliminary kind of step, is that helping to make sure you fill positions, or how difficult is it to do?
It is, and it is difficult, and we will lose people to better opportunities, just like other people are, and so our value prop really has to be good benefits and good work environment, and our contractors have helped us quite a bit weather that, but I won't say we haven't been impacted by either having a hard time finding people and or losing people to other opportunities.
And what is your turnover rate?
We'll have to provide that to you, Madam Chair. We can get that to you.
All right, thank you. Chairman Whitson.
Thank you, Madam Chairman. Chairman or Commissioner McCord and your team, I just want to compliment you, echo what Chairman Williams said. Your legislative liaisons were so responsive anytime we made a request. I think y'all given more tickets than THP has in their history. Y'all done that in the past 18 months. And but my questions have to do with the federal award allocated for use and the investigation of fraud that y'all were given. And just for our information, how many instances of fraud were investigated, and how many of those investigations determined there was fraud?
So we'll have to get information back to you on that specifically as well, if we can do that. We don't have that at hand. It is, and it's really a few different categories of fraud. There's the category where there's, and we've had sister states who have foreign actors trying to penetrate with basically organized crime. We have people, and we've had fraud before the pandemic too, who just don't give the correct information, or a combination of those two. And so those fraudulent claims, we work with law enforcement hand in hand, but in terms of that specific information, we'll have to get that to you in the committee.
Yes, Commissioner, if you could just send it to the chair lady,
Okay.
And then she'll make sure we get it. Again, I just want to compliment you and your team. You got a very difficult job during a very difficult time.
Thank you, sir.
Chairman Hicks.
Thank you, Chairman. Commissioner, good to see you again, of course. Just a quick question, well, a couple of quick questions, I guess. It was mentioned about the unemployment trust fund. I think there was $939 million that had been added to that fund. What is the current balance? Did I miss that? I heard how much it put into it, but I don't know if I heard the actual amount.
Yes,
Go right ahead, Andy.
yeah, the current balance as of today is $1.123 billion. The unemployment trust fund has been self-sufficient. We have not had to utilize any supplemental funding since December of last year. We ended last year at 1.128. We are returning to pre-pandemic levels as we're starting to right-size through the pandemic. When the federal benefits ended, we were paying out about $8.9 million per week, and that was at July 3rd, 2020. Now we're back to our 2019 levels of $3 million to $4 million per week. So the trust fund is projected to remain above the $1 billion threshold. As many of you know, that $1 billion threshold is very important to ensure that the tax rates stay low for employers in Tennessee.
Changing gears just a little bit, some challenges that I guess certainly we saw it, and I know your department saw it, was the system for the unemployment insurance tax and benefits system that I know was being implemented at the front end of this whole pandemic. And I hesitate to ask this question, but I'm going to ask it anyway. Are we ready for the next pandemic? Is the system up? Is it working? Is it ready? What does that look like? What are the challenges? If it's not, what are the challenges that are left to get that system fully functioning?
Well, let me take that one. We are on the path for another modernization, and STS is working hand in hand with consultant Representative Hicks at the bequest of the ISC committee to make sure that it goes right this time. But there have been many lessons learned in terms of scalability. At the beginning of the pandemic, we were struggling because our vendor couldn't get computer hardware because everything had shut down to scale. So those lessons are learned not just from a user interface, but even just keeping the system up and the horsepower to do that and how to scale. So those lessons will all definitely roll into to this new procedure, including the work with this consultant from STS.
So staying kind of in that same vein, Commissioner, what other resources could you identify within your department that are needed at this point if there was another downturn, if there was another uptick in COVID cases? Are there other resources out there that you need that we could help?
Thank you for asking that. So what we have is, again, this is federally funded, and adjudicators and appeals hearing officers are the ones you need the most. And by the way, the federal requirements will not allow you to contract those out. And so that was where we were when we were trying to work through the bulk of this. Is you're a little bit handcuffed on scaling. How are we going to scale if we can't use what's called non-merit staff to make some of these discussions? So some of that conversation from a process improvement side is conversations back with the feds to say, hey, it's going to be a matter of scaling. Now, having said that, we have a customer relationship management system that was able to scale to outside entities to help us with one interface. We had that, predated me. It was having some experience with that. It was really, really top-notch to be able to include those scalable contractors, which we'd never done before. So again, a lot of not just the system, but organizationally, what do we need to do? But we are swimming upstream a little bit with some of the restrictions that are placed on the people that we can use to do the jobs where the bottlenecks are.
And then just kind of a follow-up question, and this will be my final one. What about, are there any other funds that are going to be coming down from the federal government that you know of? Are you guys waiting on any additional funds?
Well, other than just the ARPA funds, I don't know if you know anything specific to unemployment insurance, do you, Andy?
Right, the ARPA funding that was passed by Congress in March. If I had one complaint, it would be that funding's not getting out to the states quick enough. Here we are in November. We've received $3.6 million in fraud funding from that ARPA funding. That just came last month. There's more funding coming from USDOL, but when, we're not sure, which makes it difficult to budget, as you know, and plan for the future.
A cash flow issue, yeah.
Right. Well, all right. Well, that's all the questions I have. I do want to say thank you. I know it's already been said, but I've had Tia on speed dial for the past year and a half, so I want to say thank you to her and all your staff. I know you guys have been working certainly hard, and Commissioner, thank you for what you do.
Thank you.
Next is Representative Shaw.
Thank you, Mr. Chairman. Thank you, Commissioner, for being here, and I've decided you're not going to get gray, you're just going to go bald.
Well, that was happening before, but thank you for pointing that out in public meeting, sir. It's greatly appreciated. I've been hiding that from my wife for many years.
I do want to commend the staff. They've been very helpful to our office, and I know I speak for everybody up here. We've all had hundreds and hundreds of calls. The one thing, though, I've never been able to get my arms around is the disconnect. There's always two sides to a story, and many a times some of our calls have been people knew they had been turned down. But there were so many didn't get the message somehow or some way. Where is the disconnect in when Johnny Shaw apply and he gets turned down, but he doesn't know it? Can you help me? I mean, would it not be an email or a telephone call or letter or something to say you were turned down?
I think we do that. As a matter of fact, I'm sure we do that. Let me turn. Yeah, I'm going to invite Rusty Phelps up here, our Assistant Commissioner of Unemployment Insurance. We try to keep him back there, but I knew that he would be asked. But no, we do notify whether you're declined or whether you're approved. Rusty, I'll let you speak to that.
Hi, I'm Rusty Phelps. I'm the Assistant Commissioner over Unemployment Insurance. To answer your question, Representative Shaw, when they file the unemployment claim, they're actually given the choice to select their preferred method of correspondence. Mm-hmm. So I really don't know how to answer where the question about the disconnect. They are told that, and I think the number of callbacks we get and the number of appeals that are filed, hold that up. I'm not saying that doesn't ever happen, and if it does happen, we can look at it, but they're actually given that choice.
Go ahead.
We get so many of those calls, and again, there's always two sides to a story. Don't get me wrong, but I know one case in particularly where a person was not notified. And I always wondered why, because anything I ever applied for, if they didn't let me have it, they told me why. And I'm just trying to figure out, are we missing something somewhere? Or is there a misline of communication somewhere that we don't know about?
Well, I'll finish answering your question by saying this. Yes, sir, I have seen, especially with the volume that we've experienced in the past year and a half, if that occurred due to a system error or anything like that, we consider that an agency error, and we would go back and honor the fact that they didn't know.
Okay. Well, I appreciate that because I think that's very important. Where are we right now in terms of all of the applications we got over this last year, COVID-related? Have they all been processed, or are there some still left, and why are they left, and blah, blah, blah?
Yeah, so we are returning to normal. Of course, the federal benefits did end. And the last numbers I saw in the federal benefits, they're still being processed. I think they were under 100 or so, just working through those. And those could be from back dates that, they came and they didn't realize they were eligible or whatever the case may be. And then those are still working through the system. But it's a very, very small percentage.
Thank you. Thank you for your work.
Chairman Todd.
Thank you, Chairman Baum. Commissioner, I really appreciate your staff and you being available to us because, as Representative Shaw and others have mentioned, we have been inundated in our offices with requests to try to help in that process. And we all knew when we got those requests just how flooded you were and what the volume was. But I also appreciate you meeting with me recently to just kind of answer some basic questions that I had. And one of the things you pointed out, and you can clarify with some real numbers that are more current, but one of the things you pointed out is we were talking about the reports we get monthly about unemployed in Tennessee. And I think I remember you saying it was 100 and, 50 or 60,000, I don't remember the exact number, that were unemployed. And I've always interpreted that, and I imagine my colleagues may as well, when we're talking to folks back home, is that means that's the number of people unemployed and drawing unemployment compensation. And you clarified, no, that is not the case. We have less than 20,000 actually drawing compensation. Those are folks that are totally unemployed that may not even be looking for work or whatever the criteria may be. So I appreciate it. And you also mentioned that you probably would try to include that in future reports that we got to stipulate between those. So I just wanted my colleagues to know that, and also the public to know that there's a big difference in those numbers. And I think it's very important for us to realize, especially when we were comparing to the number of job openings that there are out there. I think the last report I saw from y'all from August was, I don't know, just under $500,000 or something. So
Yes, thank you for that. And yeah, so they are roughly 140,000 people who are designated as unemployed. Before the pandemic, it was about 130. Before the pandemic, those 130, probably 17,000 or so were continued claims. So, drawing unemployment insurance. We're close to that level right now. Those levels are coming basically back to pre-pandemic levels, and we can see that with the trust fund returning to normal. That's kind of a leading indicator there that we're not paying out and the trends are going in the right direction. I think it's important to understand, especially as we go into other phases, that only 60% of people in a normal cycle who apply for unemployment insurance are eligible. Because while employers pay the premiums, employees earn eligibility through work history and other factors. That's not what we were doing for the last year and a half with the federal benefits. It was, to call it unemployment insurance was a stretch at the very least. And so we are back to the TUC program, Tennessee Unemployment Compensation Program, where you pay premiums and you earn eligibility, and just like any insurance, if you're not eligible, then you're not eligible. So that's all returning to normal areas.
thank you, Chairman. I appreciate you pointing those other points out as well. That's very important for us to know, and that we are getting really, really close to pre-pandemic levels. That's very encouraging, I think, to our constituents. And I would also continue to encourage you in the area of fraud to continue to really look at enforcing folks that are supposed to be certifying every week and making sure that they are actually certifying. I still get reports from business owners that are getting a lot of calls and hang-ups, and they firmly believe these are folks that are simply checking off a box that they have applied for a job or they've called about an opening, because you and I both know there's plenty of work. It may not be the level that you may have been let go for, the level of pay, but it certainly pays better than what the unemployment pay is, which is what it's supposed to be. And so I appreciate you and your efforts in that area as well, because those 17 or 18,000 right now certainly should be able to find work if they're actively seeking. So thank you so much.
Thank you.
I'll just add an interesting statistic from the Pew Foundation, said that in Tennessee there's 1.5 times more job openings than there are unemployed individuals. So there's a mismatch. Next on our list is Chairman Hawk.
Thank you, Chairman. And in that vein, I'll continue having the conversation about that. I'm wondering, absent the novel situation that we've gone through over the last 18, 19, 20 months, how can we utilize your department with economic and community development and all the other departments to handle the workforce issues that we've got, the workforce concerns? And you're very receptive to an email I recently sent you that I've got a newspaper in my district who can't find enough delivery men and women to deliver their newspapers, and they're wanting to get your database to start calling these people instead of having these people call them for a job. They're wanting to call the people on your database. So how can we bring this all together as a family and say, all right, these are the folks who are chronically unemployed, and we've got this employer who's desperately needing somebody. Big question, but are we working toward a way to correct that?
Absolutely, and I think the first thing is you frame the problem. And to your point, we have a demographic issue too. So the data, the research will show that the pandemic really finally pushed the baby boomers, for the most part, out of the workforce. And our population, working age population, has not kept up with what's leaving. And so before the pandemic, we talked about the skills gap, because a lot of those folks were skilled labor and they're leaving. Now we have that still, and just a people gap. And so what do you do in that situation. I mean, the first thought is, well, you just try to get them from other states, but you get to a zero sum, continuing to go higher and higher. And so you got to get more people, you got to get a higher labor force participation rate, is really what it is. And so how do you do that? And so part of how you do that is 200,000 men and women transition from military every year in the United States. There's a lot of those coming out of Fort Campbell. They'll have 80% of them don't really know what they're going to do before they transition, is the number that we work with, and their unemployment is higher than the general population typically. So we're leaking people, if you'll excuse the term. So a really tight connection, especially we're blessed to have Fort Campbell here, where 400 transition every month, not including spouses. And so we have a great pipeline there. Okay, so the second piece to grow the pie is we have 500,000 working age people, or right at 500,000 working age people in Tennessee without a high school diploma. And so how do we connect to those who are traditionally disaffected and bring those folks on? Those are big numbers. Both of those are big numbers. You get smaller numbers with reentry, and I know it's a recidivism issue too when you have a good job, but it's also a way to help your workforce. And the third longer-term play that we're working in concert with other agencies is work-based learning. So we're double what we were, the Department of Education's double, and I say we because we're in this together, double what they were in work-based learning a year ago, which was a pandemic year, but even more than pre-pandemic levels. And so there's a big effort on getting 16 and 17-year-olds involved in the workforce, because a lot of good things happen and a lot of bad things don't when you get that happening. And and I use this example, and you can tell I've said this before. I mean, we go and we frame this a problem to employers all the time. One of the things that we have done in the department is employers worry about a 16, 17-year-old being on the floor, wherever the floor is, because they're afraid they're going to get in trouble. Well, we're the department that can get them in trouble. And so we started a consulting piece to our agency and our workplace regulations and compliance labor standards that will go in and tell an employer what you can do and what you can't do, and how, if you set up an apprenticeship program, how that can work. And it has really opened up a lot of opportunities that may have not been there before. So it's key to working together. And finally, I'll take a breath. We have 2 million people receiving some sort of public assistance. And one of the most important workforce development efforts in the state is the one we know a lot about, is the Families First initiative, and moving those folks from to sustainability. So we're going to have to grow that piece. We're at 60%, a little over 60% now labor force participation rate, which is one of the highest in the Southeast, but it's not good enough. And so we're really, really focused on growing that labor force participation rate, both near term and in the long term.
Chairman Hawk.
Thank you. And just to coin a phrase that one of your commissioner colleagues, Commissioner Carter, told us before lunch, it's growing capacity within these families and reducing dependency. And I think you've just reiterated what we heard from him before lunch. So thank you very much. Thank you, Chairman.
Commissioner McCord, we're getting towards the end of our questions. I've got a few more for you while we check that list. Can you compare for us the wait time to receiving unemployment compensation during the height of the pandemic to now, where we are today?
I'll see if Rusty can give us at least a general idea, if not specifically.
Yes, thank you. Our federal timeliness standard is 21 days. That means that they want us, as a general rule, to be able to tell the person that applied within 21 days if they're approved or denied based on the state law. Now, that standard is 87%. I think, and this is by memory, and so I don't want to, anybody to say that I was misleading someone. I think 24 out of the last 29 months before the pandemic, we met that in Tennessee. We met that standard, and we're oftentimes up in the middle 90s. Where it's been over the last 18 months is nowhere close because we had several years' worth of work filed within that 18 months. So are we getting there? We're getting much closer, yes, sir, for sure.
Are there any additional resources that you would need at the present time in order to improve the wait that we're experiencing now?
So let me, I'll defer, let me answer first. Again, it comes down to who we're allowed to use. Adjudicators and hearing officers, we continue to hire and train those, but who we're allowed to use from the feds is we get a little bit of a bottleneck there. So we feel good about where we are, just some work to do.
During the height of the pandemic, did we have to wait as a state in order to get funding from the federal government? Was that part of the delay?
Andy answered, yeah.
No, we did not have to wait for the benefits to be available, and they were placed in our account. Actually, when Congress passed CARES, it took a couple weeks for those funds to become available, and when those funds were available in the account, we were issuing payment next day.
Okay. Chairman Ogles.
Thank you, Chairman. Commissioners, thank you all for being here. And you may have touched on this briefly, and excuse me being tardy. But I've specifically been asked by gotten several emails over the last couple of weeks, and we've had recent legislation that I believe touched on these changes. But if an employee is specifically terminated for not complying with a forced vaccination, a federal mandate to say you have to be vaccinated or you'll lose your job, and they work for the healthcare industry or they work for a government contractor, are they going to receive unemployment benefits? That's the first question. And then
So thank you for that question, too, because I think it's very good to clarify, and we'll be getting a note out probably today or tomorrow to the whole General Assembly to answer that question specifically. So if we consider that a change in employment conditions, and a significant change in employment conditions, and so this is an important piece, it will not disqualify them if they leave, if that is the reason they leave. Now, they'll still need to meet all the other eligibility requirements, work history that we just talked about, and the other eligibility requirements under TUC statute to make it, but that will not be, I guess the best way to say it is that won't be called termination for cause. And so that will not eliminate them from, that will not be a disqualifier for them.
Okay. Chairman, if I may. What if they're not actually terminated? What if they're placed on an extended unpaid leave? At what point will they be eligible for unemployment benefits? For instance, I'm not firing you, I'm just saying I'm not paying you and you can't come to work. You're going into hold mode for an indefinite period of time.
It's a really good question. It's one, being in charge of the unemployment insurance program, I'd rather answer this way. They should file for unemployment if that happens. And the reason that is because we never discourage someone from filing for unemployment because of the point Commissioner McCord made about there's several factors that have to be considered for eligibility. One of the things that has to be considered is an employer may be given a certain amount of time to investigate something or to make a decision, but you have to be extremely careful in that that's not always fair to the claimant to leave them hanging in limbo for too long. So there might be one situation, if I answer you with just an across-the-board yes or no, there might be one situation where an employer interprets that as, oh yeah, I can do that, or in this case, I can't. So it would be better if they file the unemployment claim and we'll bounce it off the laws. I'm sorry, that was vague, but.
I understand. And then let's just say, for instance, they are paid an unemployment benefit. Will that be state money or federal money? And once that money's paid out of the trust fund, how will that money be recouped and put back in the trust fund? For instance, if we pay out $200 million of unemployment benefits because of federal mandate, how will that money be reinserted back into that trust fund?
Yes, so the way it happens now is they'll be eligible under, if they meet all the eligibility requirements, for up to 26 weeks. And if they continue to meet the work search requirements and that sort of thing. And so anything it's a dollar for dollar. Every dollar that comes out of the trust fund is paid for by premiums to employers. And so the employer will pay. There are no more federal unemployment-related benefits. And so everything is state, and the employers pay for those premiums, unemployment. The trust fund is built on premiums from employers.
Representative Ogles.
So is it fair to say that the actions of a few industries will be recouped and repaid by all Tennessee employers across the state, kind of unilaterally, based on the decisions of a couple industries?
No, that's the, I'll let maybe Andy answer. The rates are by industry sector. And so one industry sector can go up while other industries don't go, and by individual employer experience. So there's an experience rating, there's an industry sector rating. So it's not all across the board. You want to add to that?
It operates like insurance. The more claims you have, the higher your premium is going to be. So Commissioner had touched on experience rating. So those benefits that are charged to you as an employer will factor into how high your rate will be.
Thank you for those answers.
Okay, next up is Representative Lynn.
Thank you very much. I wanted to know, is there anything that could be done in your mind to improve the wait period? Anything we could do in Tennessee, maybe have employers directly register employees who were just let go or fired, as you know, on the day that they were let go or fired or something like that. I know at our company we give a separation notice and we mail that to the employee or give it to them if they're local. And so, you know, it takes a little bit of time, to get that to them, and then they file, and it takes a little bit of time. So what could be done to maybe automate or streamline things a little bit better?
So and I'll give it to Rusty here to finish up my answer. We do have a mechanism, and we really promote that, especially during the pandemic, for employers to file on their employees' behalf, and especially if it's a larger layoff or something to that effect. Right. So we get it, and we're able to upload and move. The caveat there is it has to have the right information, because what you don't want to have is a claimant, a former employee, thinking that they were filed on behalf, but there's information that's not there. Do you want to add anything to that?
I would like to very much. That's a good question, Representative Lynn. The best thing that could happen is we would need your help. Because, and I'll tell you why, in the last couple of years specifically, there was an idea that we needed to promote more electronic filing of employers' quarterly taxes. And in that idea and proposed legislation, it was mentioned that if they don't do that, if they have a certain amount of employees and they don't participate, that there be a small fine added to that. The reason behind that is that it helps an underfunded department, mine, to function better and more efficiently. That was not passed. We were asked to take that out. So it's kind of like the point you made about the separation notice. Yes, it would help, but there's not a lot of teeth behind that. The other idea that Commissioner McCord mentioned is our partial system. If we could incorporate every employer in the state that had a certain number of employees to use that and put some teeth behind it, it would help my division a whole lot. But it's going to take a partnership between us.
Okay, it's called the partial system. We have 230 employees, and I don't know anything about it. If you would just send me a link.
I'd be glad to, and
I'll
I'd be
make
glad
sure
for
we
you,
use it.
and I'd be glad for you to pass it on.
Thank you.
Chairman Faison.
Thank you, Mr. Chairman. Commissioner, good to see you. Just wanted to give a shout out to my little buddy Tia back there and Eric Mayo. I did step out, so if anybody else gave them some love, I'm going to give you some more love. They have been a rock star for the last year and a half for a lot of our districts, especially I was at lunch last week, and the guy's like, man, they've really helped us out here. So thank you for that. Secondly, if I did step out, and I don't want to ask a question like other people have the same questions you've already answered, but you inherited an old Cobalt computer system program. I came out to see you one day, and we sat there and chatted, and you were telling me all about how miserable it was navigating this old computer system that you inherited. And I was wondering, have we graduated from that? Do we have new infrastructure, new IT? Are you operating on a system that's comparative to what we need to operate nowadays in Tennessee?
So it's not, there was a lot who were working on COBOL, but we are a little farther ahead of that. But there's no secret that we were having problems even before the pandemic. We're a lot better than we were then, but we've still got a ways to go to get better, and that's a real big focus to an earlier question about where we're trying to move.
Thank you.
Chairman Faison.
Thank you, Mr. Chair. Is that part of your budget request to the governor? I didn't watch your part of your budget request to the governor, but is this something that because I feel like what your department does is such a huge deal. God forbid something else happened like we do. I want your computer system, your technology to be state of the art. So can you just kind of tell us as a committee where you're at with that and what are the steps you're taking?
It is part of the ARPA request that we'll be able to get that, or we anticipate getting the money that we need from so we have enough money, not necessarily state money. But yes, we are actively working toward doing that, and we've set up a whole nother organization within Rusty's group to drive that new piece, and that will be the focus probably for the next few years to make sure we get to where we need to be, because it's a big implementation. It's not something small. And so, and I mentioned earlier that STS has consultants coming alongside, so the missteps in the past will not happen again with some expertise that they have brought in externally.
All right, Commissioner McCord, I think we're at the end of our questions. We want to thank you and one more, Chairman Hawk.
Forgive me, Chairman. Doesn't happen very often, but Chairman Faison actually brought up a good point that I'd like to elaborate on a little bit. And Chair Lady, Representative Lynn also said something to it. And Rusty, I think you talked about matching up a piece of legislation to move everybody onto electronic. And as we're improving our computer systems at the state level, it kind of comes full circle. We still have a lot of constituents who are not served by broadband or not served by the computers, and that's the challenge that many of our constituents are having. And when you look at some of the socioeconomic issues that a lot of our constituents are in, they're not quite there in their life's journey as well. So there's a balance that we've got to figure out how to get the whole world on the electronic system, on the emailing system, but how to get that access to the thousands of folks across the state of Tennessee who don't have it. So there is a balance that is there that I know my district deals with, and several folks in the committee have challenges with too. So I will throw that 2 cents out there. Thank you.
Thank you. And let me just say to that, we're on the path, to your point, of reintroducing unemployment insurance resources to the AJCs before the pandemic, and we're going to get back to that because it's not a all or none sort of thing, at least for not now. And so the resources, local resources to help the folks exactly that you're talking about with barriers to that, however those barriers might be.
Okay, Commissioner McCord, we want to thank you and your team for coming, and I want to reiterate that we appreciate it when you help us when we're asking for help for our constituents who need assistance applying for unemployment compensation. That helps them and makes us look good too when they get serviced promptly.
Thank you, sir.
Thank you.
All right, members, we're at the end of our agenda for today, but before we adjourn, I want to remind you that our focus hearings will resume tomorrow at 9 a.m. in this room, House Hearing Room 1. We'll begin with the Department of Mental Health and Substance Abuse Services. Absent objection, we're adjourned.